So we're going to do the weekly watch list today. We were supposed to do it yesterday, but now we're just going to break down all the pairs that we're looking to trade this week, and obviously the ones that we're already in. So let's break down the one that we're already in, and that is USD Jpy. We took an entry on this morning, and as you can see, it's moving quite well in our direction. Of course, it was a sell position. If we go down to the 4 hour, we'll get a better understanding of what we're actually looking at. But again, the entry was on the 1 hour, but if you can see here, this is absolutely perfect in terms of a shooting star candle. But if you were to enter after this shooting star candle on the 4 hour, our entry would be down at the bottom of this close. So as you can see here, this blue is what we're in profit, and this would have been our entry. So we would have just been going into profit right now. So we like to take our entries off of the 1 hour, and as you can see here, in that 4 hour candle, at the very start, there was actually the same sort of candle. It's basically a shooting star candle, almost perfect. And how we managed to decide to get in this position is, as you can see, we have this incredibly well respected area of what was support. Once it's broken, it's now resistance, come back up to retest, and this was our entry signal. But of course, we weren't just looking at the 4 hour, we were looking at the overall bigger picture. Now, as you can see here, this is the push phase, pull, and now we're in another push phase, right? So that would tell us that we are in bearish structure, and now that we have broken below this area here, which you can see if we go down to the 4 hour, it makes a lot more sense. You can see we've had a nice touch here, perfect touch here, touch. So when we see this big, massive, bearish engulfing candle, we know that the market has to fill in gaps, right? So when there's a big move, the market has to retrace, fill in the gap, and then we see what happens for there. So after seeing this crash through such an important level, that was a confluence to us to say, right, okay, we're going to need to have a look at the retracement, because if it comes back into this level and retraces the way we think it's going to retrace and give us this entry candle, which was a shooting star, we know that it's a great time to be getting in a sell position, at least just down to 108.225, which is the next area that's most likely going to cause us trouble. And as you can see here, we've had that shooting star candle, then we've had an engulfing, because it's engulfed this bullish candle here, and now we're coming back up, because again there's a push, pull, come back into this area here, which has been like a really mini area of support. If we just draw that in here, it's really mini area of support. We're coming back up to sort of retest that now, so it's going to be push, pull, back into this zone here. Hopefully, if we get this close on the 1 hour in 9 minutes and 13 seconds, back in here, and then that should see us back down to that area, and we're looking at a 4 to 1 risking 2%, so we can be looking at hopefully by the end of today, because it's only 69 pips, it should fall under the average daily range, and we could be looking at banking 8%. And with last week being such a shambles, with the markets moving sideways, as you know, the market doesn't always trend. It's going to be good to recuperate some idle moves in the market. So let's go on to, there was one actually that was ready to enter that we missed. Let's find it. GBP, I think it might be in the majors. GBP Aussie, there we go. I think it was this one. Yep, missed this entry. So last night, didn't bother staying up for the market open, just went straight to bed, and as you can see here, this is going to run straight to target, which is annoying. We've got a nice double bottom in amongst a descending wedge pattern. As you can see, descending wedge pattern is getting smaller, the moves are getting smaller, so you can see the break of this low down here is quite significant. The break of this low down here is getting less significant, and then we've tried to break it again and failed to break this low. So very basic signs to say, right, the market is actually moving in the opposite direction soon. And then of course this price action being squeezed is another confluence to tell us that the market's going to reverse and move up the way. And then the final confluence was, of course, this new bottom trend line that we can see as part of a bigger pattern. we've broken, you know, a very strong uptrend. We've come back down, we pushed back up, come back down, push back up, and now we've used this as support again. So that was the final confluence. What would have led to us getting in that trade had we have been awake. But you can't get in them all. It's good to know that if you were going to get in this trade, you would have been making some good profits. So I'm not going to dwell on that too much, and we're going to go on to the other ready to enters. USD Swiss, if you haven't already gotten in a dollar pair, we are expecting dollar weakness. But again, this would be quite a good confluence because we've broken this really strong uptrend right now. This area, as you can see inside this box, was a very, very, very strong area of support and resistance. It's been support at one time, it's been resistance at another, it's been resistance here, then it's been support, and now, of course, once it's broken the area of what would have been support, we are expecting a nice little push down somewhere around this area, pull back into this region, and then further down. Okay, so that's going to be a few confluences. It's going to be the new bearish trend line. It's going to be this box here that runs all the way along to the most recent price action. We know by looking left it has been respected recently and in the past quite well, so it's not an area that we can ignore. So we've got that new bearish trend line, we've got this area that's now going to be a resistance, and it also lines up nicely with this bullish trend line. And once a bullish trend line has been broken, typically, not always, but typically the market will come back in to retest it to see, okay, do we respect this trend line break, or was it just market manipulation to try and get some sell orders and then flip off in the other direction and take that liquidity. So if you haven't already got in a dollar pair, if you didn't get in USD Jpy, it might be worth looking at getting in on this pair. So gold needs a little bit of a retracement, but again, this is what we were looking at, something extremely basic, extremely simple. But I might actually move this from ready to enter because it doesn't look like it's ready to enter. It looks like it's just ready to take off, because what we were expecting was, you know, it'll push back into this zone here and then push back up again. But again, the market's in an imperfect place, so we're just going to have to wait for that. GBP CHF, this is going to be a really good pair to get in. In fact, we might actually get in right now, just because with this area here, this trend line and this resistance zone, I thought it was going to push up. In fact, this is absolutely perfect because I'm actually going to enter in 4 minutes. Because this is perfect, because what we've looked at is this area, right? We've looked at this area with this new downtrend line. I'll quickly break it down before the 4 minutes is up. But it's a great sign. So we have this trend line here. We are in a bearish trend. But what we need to be careful of is, are we in a bearish trend and for how long? So we are in a bearish trend. So we need to go to the higher time frames to see, right, what's actually happening here. We have this massive push up. Now, if I throw a Fibonacci here, so let's take this low here. See, this is the low we're taking it from. Take it from this low, and then we're going to push it all the way to the top of this high, spread it out across, right? This is just to give us a rough idea where price could go. Now, one of the good areas that price, especially on a big move like this, will retrace to is the 0.5 or the 0.6. It doesn't mean to say that it won't stop at the 0.382, but we've actually broken below the 0.236 and we're coming back up to retest it. So the next leg, I mean, I am very confident that we would go back down to here, 0.5 Fibonacci level. So if I just quickly draw a line like this, so this is typically where I'd be looking to take targets. The bottom of this wick here, so let's just make it a little bit more accurate. The bottom of this wick here to the top, and then as you can see here, that lands perfectly in line with a 0.5 Fibonacci level. So let's just take that back off the charts. And anywhere in this region is where I'd be looking to take targets. I'm not wanting to be greedy. markets really like round numbers. So, I mean, I might even just take it to the 1.24000. Nobody's ever going to make a target and make it 1.24364. Like, nobody really cares about mismatched numbers. We like to keep things round numbers, especially the banks and institutions do. And they are the big players in the game, so we really need to be making sure that we sort of adhere to those rules. So, I mean, we could push this all the way down potentially for a very, very big risk to reward long term. So, on the 1 hour, as you can see in 1 minute 44 seconds, we are looking to close. Now, what's happened is we've really stalled. If you watch the price action, how it's approaching this level, you don't want it to be steaming in really hard and fast. You want it to sort of get there gradually and then sort of round off a little bit and then have perfect candles like this. Ones where we have pushed up, the buyers have pushed up, the sellers have taken control, and we've fit perfectly on this line, and it's also inside this resistance zone. So I would be happy to take a sell position in roughly 1 minute's time, and I'll have my stop loss behind the top of this wick here, a little bit out of the way. So as you can see here, let's just delete this and put it on the 1 hour so it's a lot more easier for everyone to see. Short positions, so this would be where we were entering, this is where we would be putting our stop loss. And then, I mean, if you wanted to play things really safe, you could get a nice 3 to 1 just down to here. So in fact, I think that's what we're actually going to do, or maybe a 4 to 1, and then this is a really quick in and out trade. And then if we do get any breaks below this zone here, we can take it all the way back down to that 0.5 Fibonacci level we've drawn on our area, so we know that if it does break below this zone, that could be the new targets. But again, to be risking 25 pips and getting a 4 to 1, if you're risking 2%, getting another 8%. If you could get both of these trades and get 16% in 1 week, that's absolutely insane growth. And if you could do that consistently, you're going to make a lot of money. But again, you just need to know where to look. You need to know how to get in and out of the market. So you see, we've started the new hour, so you should always wait for the candle close. We wait for the candle close on the hourly. So typically, I mean, some people might say this is a little bit more of an aggressive entry, but for me, looking at the charts as much as I do, you sort of get away with taking a little bit more aggressive entries, because, I mean, typically what I'd expect in the next couple of hours is we might have another couple of indecision candles. We might not just take off straight down. So I'm going to go into my lot size calculator right now. So I know my stop loss is 25 pips, right? So I'm going into my lot size calculator. I'm typing in my account balance. I type in I want to risk 2%, and then I type in, right, 25 pips. Let's just round it up. Let's make it 26 pips, right? 26 pips, and then we've got, in fact, no. Let's make it 25.5. So I'll go back 25.5. Or no, just 26. Then we've got Gbp Jpy, and then that has gave me my lot size, right? So I've got my lot size now, and now we just go and find that pair, and it was 0.96. 196. Okay. And then we're selling, so we're now moving this into the blue, which is entered, right? So make sure you put your stop loss in. So mine is 1.27145, 1.27145, and then 1.25868 is my target. 1.25868. 868. Yeah, perfect. So that's just entered, and that was actually good that you get to see exactly how we would enter live of a trade. This is exactly what we are looking for in these areas, because they're highly probable areas for them to move in the direction that we want them to be moving in. So hopefully that's been really helpful for some people, and it does actually look like they might actually take off from down here. We never know. I mean, from experience, I think we maybe have a wee bit more indecision. We may have another little push up, but it seems very early signs of actually moving away. And that's all we're looking at, the ones ready to enter. We'll go to the watch list, which is sort of just the ones that we're paying attention to that could develop for this week. So let's start from the bottom and work our way up. So Euro CAD, a little bit of a messy one now. I mean, I personally wouldn't want to touch any sells because we have broken this trend line, and then we've come back below it, then we've broken it again. Then this little push and pull phase is telling me that buyers are actually winning right now, because we've broken this previous high, come back down, failed to break this previous low, and everybody who's watching this would know that's very, very basic bullish structure. Higher highs and higher lows is bullish structure, lower lows and lower highs is bearish structure. So I would want price action to clear at least this level, come back in to retest like these highs, and then I'd be looking, if I get an entry signal, to take a move in that B wave. But until then, I'm just going to sit and watch this one. USD Jpy. Let's go to the daily. Let's see what we can see. What was it we were looking at? There's so many pairs, so many opportunities if you know where to look. But I mean, we're establishing new highs past these ones. So I mean, we'll have to go to the weekly and look left here. Where are we? We just seem to keep going up. Let's change that to black. Okay. Let's change this one to black. Right, so let's look left. Right, as you can see, this is an area of interest. But again, yeah, it's definitely an area of interest, because you can see here we've got this well-respected area. And because the higher the time frame you go up, the more significant the touches actually are, because it's a full week's worth of data. Right? Normally, if I was to draw a support or resistance line on the hourly, I'd want way more touches than just 1, 2, 3, 4. Well, to be fair, there's actually quite a few, but typically what you'll see on the 4 hour and the 1 hour is way more touches, of course, because it's smaller data sets, and then on the weekly, much larger data sets. And always look left, and we can see that this is the next area that's going to cause us problems, because we've broken this high. Now, if I was to think about entering this trade, I would go down to the 4 hour and I would just get a better understanding of what's happening here. But if we just make this a little bit more accurate, you see the top of this line that we are respecting. Now, it's sort of just one could say that we could just disregard this and use these 3 points because they match up nicely, and this could have been just a market trap, because actually it did break above, we've come back below, and then we retested that line again perfectly. So I would say that if I was to look for a position in this pair, I would take a sell position and I would take it to the bottom of here. But typically, from experience, when you have this many touches and sort of like a broadening channel like this, and we just keep moving higher, we are going to reverse. And typically speaking, very loosely saying this, typically speaking, you would come back down to where the channel originally started. So we could watch this one. I might actually move this to the green list, because it is something that we could be watching more closely to get a sell position. Let's move that to the green list. Right, let's move on to Aussie CAD. Hey, and we always, I mean, yeah, this is not really doing much for us. That's why it's always good to have your analysis done on a Sunday. I mean, we did do our analysis, we just didn't do the recording. So when you come in on the Monday, the Tuesday, the Wednesday, the Thursday, you know what you're looking for. You literally have to spend next to no time. You could just look at everything that you have predicted to happen. Then you go and analyze what's actually happened. And if that matches with what you've predicted and you get the entry signal, you enter. It's literally that simple. It sounds real easy, but it's the actual placing and the understanding of how the market works and when to get in, when to stay away. There are a lot of tricks that it could play on you, and unfortunately, I don't really see many people mentioning these types of tricks that the market plays on people, because there's literally so many, and I feel like it's a lot of work for people. So right now, I mean, I'm probably going to stay away from this pair because we had anticipated short positions, which is sell positions. Let's get this off the chart. We had broken below this ascending channel, the bottom of the ascending channel, so we've come back up. One could argue we could make this a little bit bigger to match these lows. So this actually could be a nice area for a sell position actually. See, sometimes again, when you have your analysis, don't, just because it's been done and you've put a lot of time and effort into it, you have to be willing to change your mind at the drop of a hat. Like, I had this analysis here, and at the start of this, and analysing this pair, said I'm not going to be entering this pair because it looks a little bit messy. But after having a second look, you can see that there's actually still an opportunity to enter. This is a blessing and a curse, because if you don't adapt and change, you can miss out on good opportunities. But if you adapt too much and you try and fit a square inside a circle, it won't work. There's many levels and trend lines that you could be drawing. You just need to know what ones are everybody else looking at, what ones are the professionals looking at, what ones are the big banks and institutions looking at. And then, and only then, can you actually make accurate decisions and be consistently profitable. So always be unbiased to a specific direction. If this breaks above this level and comes back down, then I'm buying this. I'm buying this, and I'm buying it hard all the way back to the top of the channel, or maybe even just to the tops of these highs. But again, I'm emotionless to any biases, and it'll literally just be whatever the market gives me, I'm taking and I'm making money from. So this is typically what I would look for on Aussie CAD. So, and then you can see here, it could be an inverted double top. And then again, tweezer tops. This is what's known as tweezer tops, when you have, typically this candle body should be like the same size as this candle body, but it's when you have two wicks that are almost, not exactly, but almost the same lengths. The bodies are almost the same lengths, and they're indicating that we've tried to push higher, failed to push higher, and we could be going back down lower. So again, in 49 minutes, I will probably be looking to enter this pair if we get a candle that peaks up, closes back down, and around this range, because it tells me that price action slowing down and we are respecting the sellers in the market. So let's move that to green, and we will move on. GBP USD, cable, sterling, whatever you want to call it. Nothing really too exciting. You can draw trend lines all day, but trend lines are, a good confluence to add to a trade. They're not really, they don't really hold much weight. So typically I would, especially with the volume and the candles being so low, I wouldn't look to buy this just yet. I'd actually expect this to be broken. And then once we come back down into this zone, then we could maybe look for buys. And it matches with the theme, right? The theme is what? Dollar weakness. We're seeing dollar weakness across the board. So if the dollar's weak and it's the second pair, if the dollar's weak and it's the second currency in the pair, then that's going to drive GBP USD up. If the dollar's strong and it's the second currency in the pair, it's going to drive GBP USD down. Same with Aussie US dollar, Euro US dollar, etc., depending on what's happening with the former pair, the former currency. So again, I'm not going to spend too much time on this. This is what we're looking for: push, pull, back in this zone, and then back up to the tops of probably this wick here. That's all we're looking at. It's really nice and simple. I'm not going to waste any more time on that. CAD JPY. Now, let's go out to, I mean, we're on the daily. That should be enough. Let's see. Let's get rid of this. You can see this channel here. A couple of abstract trend lines we've drawn in, but you can see this channel here. Started since the 17th of March 2020, and we've pushed all the way up. We've actually broken the top of it. This could probably be a little bit more accurate. We've broken the top of it, so now we're just waiting to see what happens. There's nothing really telling of this pair whether we're going to be going up or down, so I'm not really interested. Euro US dollar. Okay, so we actually called this and got out early. We got out early, but I called this ages ago. You know, let's see. Yeah, we got in, I think it was like this candle here. Then it came back up, came back down to retest again, and then it just exploded. If we had just held this, we would have been in great standing. Let's see how many pips that would have been. Price range, so from round about here to where we are now, there would have been 185 pips, but again, that doesn't really matter. It's all about what we're looking at getting back in terms of risk. But as you can see here, we've got like sort of like a double top. The dollar's weak, so of course this is pushing this up. We did anticipate a little bit of break, retest, but this might have been the break and retest. We anticipated a break here and a retest back down, as you can see by the arrows, but didn't actually play out, just kept going up and up and up. So personally, I'm not looking to get in this trade on this pair. I'm just going to leave it. Aussie US dollar. Again, it's quite overextended. We just seem to be going up and up and up and up and up. So I'm not looking to be a buyer or a seller of this pair right now until I could get something a little bit more predictable. Very, very easy to see massive moves up and think, okay, this is just going to keep going up and up and up and up, but it might just go up a tiny little bit and then just tank all the way back down. So understanding the market psychology and behavioral finance of the people who are actually in control, i.e. us, the people who are actually trading. If you understand how most people are going to be trading, you can capitalize on a lot more moves. You can capitalize on staying out the market when you don't need to be in it. So again, not interested in this right now. Euro CHF. I mean, typically it would have been a nice setup, but it's erratic. You're seeing a lot of spikes to the upside, a lot of spikes to the downside. We are falling and we could keep falling, but it's just sort of moving sideways. Typically what happens is the dollar pairs will be the ones moving, and the other pairs, the other crosses like this, Euro CHF, will typically move sideways. And then on the flip side, when the dollar starts to move sideways, you'll see these pairs really moving. So we're just in that phase right now where pairs like this just aren't really moving much. You can sort of tell just by the fact that, you know, if you draw a box over all this price action from, let's see here. Let's say from like the 5th of May, we're just moving sideways. We're not really, and the average that we are moving is 41 pips, like 41 pips, you know, and that's over the course of what, like a couple of days. Like, it's not really, unless you're like a super small scalper, it's not really what you want to be getting into. You want to just be waiting for when the market moves again. This could be interesting. Again, it's a little bit erratic, you know, so you could just see of sort of like an ascending triangle here, not ascending triangle, an ascending pennant, sorry, an ascending wedge. So typically we would see a retracement back down into this zone here, but just to give us a better understanding of what's actually going on outside that. On the bigger, longer term scale of things, you see we've had this touch. Now, daily, very significant touches. Now, what we had anticipated is because we had a break, we've come back up to retest this resistance zone in the outside of the trend line. We anticipated it would come back down. Now, what's happened is we've actually pushed back up above this resistance zone, which would now be support, and then we zoom in a lot here, you can see that's where we drew that ascending pennant, ascending wedge. Now what happens is typically that will break out of that. What happens when we get to this trend line here? We've kept it on the charts because the market could still respect it. We don't know what's going to happen. There's nothing really clear. I would like personally to see price really push up and then come back down if we are going to be looking for buys, and vice versa. I'd like to see price really push down and then back into this zone to look for sales. So silver, staying far away from it right now. Again, Euro GBP ranging, staying away from it right now, and CHF JPY. Again, typically just like silver there, we want that. Typically, I think it could be said that we missed this one because that was the retracement, and then we've got the push up. So again, nothing really to look there. So let's look at the future ones. Futures like ones that could be ready in the next week or two. This one is definitely one to watch out for. And I would probably encourage everybody to have like some sort of system like this, like a watch list, a ready to enter, an entered, and a future. Futures like the ones for like that need quite a bit of development. Entered is obviously the ones that we've just gotten in. Ready enters like the ones that need your immediate attention, like they're about to close in like the next hour or 2 hours. You have to be watching. And then the watch list is like everything that could come into fruition that week. So if you have all of these, you know exactly what pairs to be looking at, what needs your most time, and then once you get finished through your ready to enters, you get through your watch list, then you can start going into the futures, and it's really just a great way to break up the pairs, and it gives your brain some clarity, your chart some clarity, so you're not wasting any time, because most people don't really think about it. You only get so much time and energy, brain energy a day to be looking at the charts. Looking at the charts for long periods of time could cause mental fatigue, and that's when you start to lose money, because your brain will make up situations just to fit your beliefs and biases to make you feel good, and it will do that faster and faster the more tired you get. So if you're really tired, it will want to get away from the chart. It will start feeling irritable, so your brain will automatically find the quickest possible solution to feed your ego, whether it be putting a trend line in a place that you really, if you were 100%, you really would know that it shouldn't be there, or drawing a zone. Yeah, it's a zone, it's an accurate zone, but is it the most accurate zone? Probably not. And then that's when you start making decisions on wrong data, and when you make decisions on wrong data, you get the wrong outcome, and when you get the wrong outcome, that gives you a sense of doubt, and then when you get a sense of doubt, that's when it spirals out of control. So a lot of systems like this make huge impacts on your trading. So this is what we're looking at for Euro NZD. Something really nice and simple. Like, not really much to say about this one, but I've had price break below this zone. Right, okay, this could have been like maybe inverted head and shoulders. So you've got your shoulder, you've got your head, you've got your shoulder. We've broke back up. That would have been the neckline. We broke back up, came back to retest the neckline, caused the double top. It was in line with this trend line here. We've sort of moved sideways. We've come back down to try and break this zone. I mean, typically I would say there would be a break to the upside just with the way prices getting squeezed and this level's being held, but looking at the volume of this candlestick on the daily, and then this shooting star daily candle would tell me that the buyers just can't seem to get things moving, and move to the upside is downside, sorry, is probable. So that's what we're looking at. USD CAD. Let's go to the daily. What do we see? Yeah, very, very overextended. Dollar weakness is the theme, so we're not really going to be looking for buys as of yet. So again, needs a little bit more development. Aussie CHF. These are going to be quick ones anyway, aren't they? We're just showing you what makes up the future list. Again, not really much to speak about on this one either. But knowing the patterns and knowing market structure, you have... It's confusing because this one could be said to be a descending triangle, right? A descending triangle, typically when prices hitting off a level, coming back down and failing to go up higher each time, there's a break to the downside. But one could also say that, I mean, this maybe could just be a flag pattern. So let me just clear this up a little bit. So this could just be a flag pattern that, you know, we've had to push up, then you sort of have a flag, and then a push back up higher, which looks like it's actually just about to happen. But again, there's not really much of a risk to rewards. I mean, you can sort of anticipate that this is going to break out here. That's typically a little bit more of an aggressive entry. And for us right now, obviously, as you can see, we've missed that. So Euro GPY, very interesting pair. So when the dollar is strong, the euro is typically weak. And when the euro is strong, the dollar is typically weak. Not always the case, but typically speaking, that's what happens. So I'm expecting the euro GPY pair, we're sort of looking at having a double top. We could actually get in a nice entry back down. So let me just quickly go to the ready enters, because I remember we had a pair that was ready. Right, okay, so we will wait on this hour. See, this is why you should always wait on, you know, a little bit more confirmation, because if you know your candlesticks, one person could easily just say, oh, shooting star candle, but it's actually, you know, tweezer tops, but not very convincingly. We just want that one little bit more confirmation to say, right, this is definitely a trade we're going to be looking to take. 34 minutes, we will come back to that. So future Euro GPY we've done. Oh no, let's go back again. So we are anticipating sales. We're anticipating sales. We'll wait on this daily close. If we get some form of shooting star candle on the daily, then of course short-term sales, maybe even back to the low if we get a tight enough stop loss. But again, if we go to the weekly, you'll see just how bullish we've been. And then if we go, always look to the left, if we go over and see the level that we've drawn in, you can see it's a really, really nice level. And every time that we've hit it, we've had big pushes up or down. So we've had a big push up, come back below it to retest, push down, big push down, come back up to retest, big push down. So we know, huge area. We're overextended, we're coming into a huge area. Now what we need to do is be careful. I'll actually go move this to the watch list. We need to be careful and make sure that we're monitoring this and we're getting the right sort of entry signals. If you get the right sort of entry signals, targets typically are where the trend line started, but could we? Yeah, see, it doesn't quite match up with this one, but it matches up with this perfectly. So to the bottom of these lows is where we would take it, but another good way to find targets is this. So 0.5, you know, could be like, this is a really good target. So it'll be somewhere in this region. That's what we're looking at. And we'll just take that off to keep everything nice and neat. So we have another small level in here, but I'm just take that away. That's what we're looking for. So again, pay close attention to your GPY, an interesting pair. We're not going to focus on this one. Last pair, GBP Jpy. Let's break it down for the top. Again, we had this symmetrical triangle. It just seems to be going up and up and up and up and up. Where could we be going to next? The next possible level here. So to the top of the wick, to the bottom of the candle body on the weekly, it gives us a nice sort of target range. We missed it. I mean, like I say, we were missing quite a few. But with symmetrical triangles, you don't know if it's going up, if it's going to go down. Typically, if you're in a bullish trend, it will go back up again. It's just a little bit of a sideways phase. But we've missed this one, and the next possible target for it to go up to is 156.000. So again, not really sweating over that too much, but we're in a really nice pair. Did we enter that one? Yeah, we did actually enter that one. So USD GPY, sorry. Let's go to the hourly. So we're nicely in profit right now. So that's typically 2%. So we've risked 2%. So we're like we're just about 3% in profit right now, which is pretty good. Now obviously still got another 5 to go, and by looking at the candlesticks right now, yeah, we're well on our way to get that. GBP CHF is the other one that we just entered. See, this is what we've just spoke about, is this being a little bit more of an aggressive entry. Typically what would happen when you do have a massive spike like this, the market will go back up and try and fill in this gap to see, right, okay, is this accurate? Now, this is where your trend lines, your zones have to be really accurate. As you can see, they match perfectly with these candles here. Let me just put it to the tops of these wicks, right? And let's just make this a little bit more tighter, okay? This is why you always put your stop loss just a little bit further behind, because if you put it like just here, it could easily just a smidgen more take you out, and that's it done. So we're going to be monitoring this pair right now. We're halfway to hitting stop loss, which is completely fine. If you know where to put your stop losses, if you know how to draw your trend lines properly, and how to find highly pivotal zones. So that's been the weekly watch list. We've went over quite a bit, more than enough for everybody to get value from for this week. You know all the trades that we're looking at, you know all the trades that we're in, and you know what we're looking at moving forward. We'll keep you updated with any new positions that we're looking to take, or if anything changes over time. Hope everybody has a good trading week. Last week was a little bit hellish with the market just moving sideways. It looks like we're getting some better volume this week, so hope everybody capitalizes on that and has a profitable week. So with that being said, we'll see you next week, probably next Sunday when we do this again, and we hope everyone has a good trading week.